Charter Hall is one of Australia's largest fully integrated property groups. We have over $20 billion of capital under management, and we have 26 years of history of generating outperformance for our investors. The types of assets that we invest into cut across the property spheres of industrial, office, retail and hotels. Our success has been driven from a large team of highly motivated and successful property professionals. At Charter Hall, we manage other people's capital as if it's our own. In fact, in almost all cases, Charter Hall Group will have money invested in our funds, or senior management or the board of directors will be invested. That creates a good sense of alignment and focused on the right outcomes. The investment objective of the Charter Hall Direct Office Fund is to invest in Australian commercial office properties. We focus on CBD markets, and over the long term, we look to provide sustainable income with a portion of capital growth. We do this by investing into properties that have high quality tenants that will continue to pay the income throughout different economic cycles. The investment strategy of the Charter Hall Direct Office Fund is to invest into high quality commercial office properties over the medium to long term. The fund is valued at over $1.2 billion and will continue to grow and diversify its portfolio. We look to provide income through fixed increases throughout the term of the lease, capital growth by selecting the right properties, but we also are focused on when it makes sense to sell a property. We're constantly rebalancing the portfolio, and that's why today it's one of the strongest unlisted office properties in the market. When we're considering a property for the Charter Hall Direct Office Fund, it must meet a number of criteria. Before we look at the criteria, overall it needs to be a prime grade property. That's an A or B grade property focused on the Australian CBD market. The criteria that we consider when choosing a property includes things such as geographic diversification, tenant quality, structure of the rental increases, the overall gearing of the fund, as well as the exit strategy for that property. When we're considering diversification for the Direct Office Fund, there's two things we generally look at. The first is geographic diversification. So where are the assets located? To that end, the fund benefits from having assets throughout the key Australian markets. That's New South Wales, Victoria, Queensland and WA. The second thing we look at is a diversification of the tenant base. The fund benefits from over 70 tenants that are paying the rent. That diversification for the Direct Office Fund means that it's far superior to the diversification you can get in a single property or a syndicate. The Direct Office Fund runs a conservative gearing level. We focus on a 25 to 45% gearing range. We think that's prudent for a property investment of this quality, and it's something investors should always focus on when looking at an investment, whether it's in a property or another type of asset class. Having a conservative gearing can make a big difference to the risk outcomes you achieve. At the liquidity event, it means investors get a choice on what they would like to do. So at Charter Hall, what we do is we write to investors and they simply need to tell us, do they wish to redeem their holding? Would they like to roll their investment for another 5 years? Or would they like to do a partial redemption, so something in between? The important thing is it provides liquidity certainty for our investors, and liquidity is delivered at their election. When providing that liquidity for investors, there are a number of things that we consider at Charter Hall. The first is whether we should sell an asset to make that capital available. The second is, should we raise new capital to allow people to exit? And the third is, where are we at in the gearing range? And we will draw down debt, provided that the fund stays within its gearing range as outlined in the PDS. Or obviously, we can do a combination of all three. When looking at capital growth from an unlisted property fund, that's primarily generated from the assets you select in the first place. And as well at Charter Hall, what we do is we do capital management, active leasing, and strategic asset reviews, which also contribute to that capital return over the term of the investment. Additionally, all our properties are independently valued on a 12-month basis from a high-quality external firm. We report our returns generated to investors on a quarterly basis through our website and through our quarterly report that's sent to all investors. One of the key features of the Direct Office Fund strategy is the length of lease term, which we've been able to achieve. Why do we focus on this? Well, it provides income security to investors and fixed rental increases over a long period of time. Secondly, it provides more flexibility when we wish to sell or exit that property. And at Charter Hall, we don't buy a property unless we have an exit strategy in place before we acquire it. Ultimately, the Direct Office Fund has very high research ratings, has won numerous awards, including Fund of the Year, and we've been very pleased with the outcomes which we've delivered for our investor base.